Good afternoon, dear traders. Today we're going to have a little webinar about the orders, limit orders, market orders, stop orders, and everything else. What I use, how I use. You see, I basically came out from the stocks industry, and it's just a little bit different between the stocks and the forex. But you know, pretty much almost everything the same, and it depends on your trading style. For example, let's talk about the market orders. You know, on forex, most of the orders are limit orders. You know, you just put in the marketable limit order the way they say in, when you trade stock market. For example, I will show you a few examples so you'll understand, and I'll tell you how I trade. First of all, for example, I trade only levels. And then when you trade levels, you have to figure it out how you trade those levels. You trade either with the stop orders, either with the market order, either with the limit order. Either you trade, for example, breakouts, or you trade limit levels, or you trade false breakouts. For example, we have a level right here at 108,744. If you're in a position, I'm sorry, if you want to enter the position, for example, if you want to trade the breakout, there's a few ways you can enter the order. You can basically put a buy stop above 108,744, and once basically the level is going to be broken to the upside, then you can participate in the position. Then you're going to definitely stay in the position. So once you basically break 108,744, you on a buy stop order, you can basically get executed right here, right above the level. What does the stop order give it to you? The stop order is giving you the opportunity not to sit all day long and just basically guard the position, because a lot of times trader does not have like much time. Or for example, you are in a multiple position and you have, let's say, 5 or 7 different positions, and you cannot be in the same position all over again. So basically the stop order would definitely give you an opportunity to enter the position without actually guarding it. So what do? You just put a buy stop order at 108,744. The problem is with the stop order, if for example, if it's a, let's say, stop limit order, the stop limit order might not be executed. For example, if you put a very, very tight spread between, the order is not going to get executed. For example, you know, after the good levels have been broken, basically the forex pair, it doesn't matter, let's say euro is flying fast because there's a lot of bunch of different stops. So in this particular case scenario, if for example you put a very tight level of difference between, let's say, buy and sell, between bid and offer, or between basically a situation in the market, there's an opportunity you're never going to get executed. So in this particular case scenario, the buy stop, basically it's opportunity for you to get in without guarding the order. But for example, if you want to guarantee, then you put either limit order or the market order. What I used to do, because you know I used to run a lot of positions, I used to have all the time buy stops. For example, what else is a stop order is good for? For example, as you can see, there is an order of 108,744. In this particular case scenario, in this particular bar, you had a false breakout, like I showed you right now. Hold on just 1 second. Let's say we'll go 15 minutes right here. You see, that was the order. So if you're going to take a look on the daily bar, you see one thing for a fact. Once basically the order, the line and the level has been broken, you can use a sell stop order. If, for example, the currency euro, it's going to go below 108,744, the orders get executed. I'll show it to you basically how it works in this particular case scenario. So, for example, hold on. Okay, this is the level. For example, if you want to get into the position, and let's say it's euro and the euro is trading right here, you can right here put a stop order. And once basically you touch the stop order, it's going to get executed. You're going to be in position. But a lot of times you don't have a time to sit with the position. So what do? Let's say if you want to use false breakout, you put a sell stop right here. And once basically the market is dropping, you're going to get executed right here. Or You're sitting and you see the market price gets here, you just buy market and you're in the position. Or, for example, if you see here and you want to get into the position, you enter the limit order to enter the position. So in this particular case scenario, take a look what's going on. Once basically you want to get participated in a market and you want to get into the position, you have a buy stop order or buy limit order. Most of the time I use buy stops for one simple reason, because I do have a lot of positions and I don't have much time. What's going on lately in the market? A lot of times the traders, right before the position that's been executed, for example, if they see the level right here, and if they want to enter right before the move, they would put right here a sell limit order. What I don't like about it, because you have to be so sure about your entry level order. So if, God forbid, the price for the euro it's going to just jump, you're going to have a stop loss, and sometimes you're not going to have a chance. So most of the time what the people do, they put the two orders together. One of them, let's sell limit order, and another one right away, the buy stop. For example, if the sell limit order is going to get executed, buy stop right away, get into the fact. And for example, if the price of the order it's going to get breaking above the level, you're going to enter the position right there. Most of the time, as I said before, most of the time the trader has to use their orders according to their trading style. For example, depend what you trade. It's all depend on your trading style, all depend what the orders you're gonna have. Most of the time, for example, if you trade false breakouts, you use most of the time stop order on an entering point and a stop order in an exit point. For example, if you trade a limit, for example, there's a limit order. For example, let's see, I'll show you one more time. Take a look. For example, in this particular case scenario, this is a daily chart, right here. And you see in the daily chart, that's first of all, we have a tested level. The tested level came from before, then we tested the level, then we tested again. And right here, a lot of people, they put in a limit order for sell right before the level for one simple reason, because it's a short stop. You see that the direction is basically very understandable. The euro, it's not breaking out in this particular case scenario, and you definitely can use the limit order right here for sale. Or for example, in this particular case scenario, if you identify the level first, you basically put a buy stop right here. Once the level is broken, it's coming back, then you enter into a false breakout. So as I said before, me personally, most of the time, since I trade a lot of stocks altogether, I use a stop orders for one simple reason. I don't have a time to watch. What I have, usually I'm going to show it to you, I have a list of stocks, and I put the stop orders. So I'm going to show you something right now so you'll understand what I do. You'll understand. And you can use it basically on anything, forex, stock market, or anything. This is a lot of stocks. Since I understand, since I do trade a lot of stocks together, I mean, take a look, there's a 1,600 stocks, 1,800 stocks. So what I usually do is, you can see this is right here, this is the positions that I like to enter. So what I do, first, I always identify the level. Second of all, this is the level short or level long. You see, that's exactly what I want to do. That's here, I'm going to say what I do, short or long. Let's say we'll get into the position right here. You see, this particular company. Okay, I put a relative risk, the name of the stock, the position long or short, and the price. So what I do, I put a stop order and, take a look again. Another one. This one is a short. This particular stock, I will definitely short. I put the name of the company and I put the price. So that's what it is. That's exactly what I do with my orders. I first of all identify the level. Second of all, I identify the price. Third of all, I identify the direction. And fourth of all, I identify sometimes the stops. For example, if the stock has the understandable stops, in this particular case scenario, I would definitely, you see, short or long the stock. And I want to show you something else. Just one moment, please. Okay. All right, and this is the what I want to show to you. It's relative to the false breakouts. If the previous page I showed to you was just in the breakouts, this is for the false breakout. So what do we have? We have a symbol, direction, level, and a fake level. So for example, in this case scenario, I'll buy the stock at 33.95. Only the stock is going to break down to 33.60 and then come back. So in this particular case scenario, since I do trade only with the stop orders, it's much easier for me. I don't have to. You see, for example, I'll show to you how many orders I have in 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16. So out of 500, it's about 15. So since 1,800 stocks, I can have 45, 50 orders, you see, right here. So I do have a lot of orders. And if I'm not going to use the buy stop order, there's no way I'm going to be able to get it. So to finalize everything, you cannot really say much about it in this particular subject. But in order to understand, if, for example, you're a limit player, for example, you trade from levels, you use only limit orders. You don't use the market order, because the market order sometimes, if the let's say currencies start to move already and market order you send, you can have shakeout. I mean, you can easily get shaken out of the position. And for example, if you trade false breakout, you use a stop orders. If you want to enter the position, you also use a stop order. It's a very simple. So as I said before, if you trade from levels, you trade limit orders. If you trade breakouts, you trade buy stops or market order. And if you trade false breakout, the same, either buy stop, sell stop, or the market order. Anyway, it's been a small webinar. There's not that much to talk about the orders. Thank you very much, and have yourself a nice day. It's been Alex Gerchik. Thank you.